You guys are everywhere in Houston.
We're everywhere. Well, I mean, again, for 21 years, we've seen every market and just to kind of give you a side note, there is not a buying season. Every market's a buying market as long as you pivot within the market that you're in. Okay. So yeah, you give us some information about yourself and about the property, very general information. So what my team does is we'll pull comps in the area. And with any pictures, we'll actually give you an idea on rehab in relation to your exit strategy. So if you tell me that I'm going to buy 43 Maple Way and I'm going to flip it and I want a high dollar flip, we'll say, okay, well, these 5 or 6 comps equate to your ARV. That's about, you're going to look at about 376. However, if you give me pictures or look at the finishes of these properties, it would seem like you're doing about $70,000 worth of work. You have the open concept, you have quartz, backsplash, all these kind of things. So we're a second eye on value. So you give us that information. And if you say, well, no, I'm going to rent this instead. Well, your ARV is actually 310 because of the rental side of things. You get an $1,800 a month rent. There are these things. So your rehab goes down, but your also value goes down. One of the worst things a landlord investor can do that's looking to scale is when they're getting their deals from wholesalers or they're comping properties on full ARV value. Well, everybody does this and they'll get in everything and you'll do the repairs and then you try to refinance, but the ARV comes much lower and you're coming out of pocket a large amount of closing for your refinance. So it's important to really, really talk to your lender about exit strategies and your plans so you can actually get a good idea about what this property is going to be worth with the type of finishes that you're doing. So that's why they'll come in and do that. And that's how we help people scale. As Jet Lending, probably one of the only places that does this, we actually take a look at what you're trying to do. And if you let us know what your business plan is on how you're trying to scale, we'll actually give you a roadmap of how you should do this with leverage and how to analyze this stuff. Because as V will tell you, real estate investing is just math. Does A plus B equal C? Okay. And if C is in the black and in the black that keeps you in business, then you buy the property. If A plus B equals C and C is in the red, you don't buy the property. So I don't want to hear any of you guys coming to me and telling me, well, I only buy in 77007. No, you don't. You buy things that make you money. Okay. So you have to kind of expand your horizons and understand that this is basically math. And if the numbers work, you buy the investment. Then you need somebody like me to help guide you.
So yeah, I think at the end of the day, your lender is your partner, and you should treat the lender like a partner and not an enemy. I mean, I'm thankful for Jed. I'm thankful for other lenders and banks that have allowed me to grow my portfolio.
Absolutely. I mean, one of the things I'll tell you, like V used the word partner. I will tell you this, if you really want to scale your business in real estate investing, you have to treat people like me and anybody, third party, title companies, real estate agents, GCs, subs, mentors, bird dogs, skip tracers, all these people. You're actually hiring an employee for your business. It's almost like a 1099 employee. So you should interview these people, lenders included, to see are they right for your business and how they operate. Do we speak the same language? Are you as responsive as I am? Like anybody tell you that's worked with me, you send me an email, you don't get a response within like 4 minutes, I didn't get your email because we're just busy and organized. So one of the things that you should really consider is honing your interview skills, because you guys are already great negotiators when you're buying properties. Use those skills to interview these third-party vendors, such as lenders. Are they right for your business and how they operate?
Totally. Tell me more about this roadmap that you said. So I come to you and I'm, still fairly green, got a little bit of experience, flipped probably 5 houses at this point. Everyone could tell me I need to add rental. So now, like I said, I got a little bit of cash. I want to scale. How does Jet help me?
So first thing we do, just because most of us have been doing this for so long, first of all, you should take a look at the pedigree information about yourself. One, what's your credit score like? Because most of the 30-year stuff, you're going to need to get at least decent rates. You're going to need a 680 score, okay? Or somebody in your entity at least needs a 680 score. So first we do is we kind of line up all the pedigree information about yourself. let's say V comes to me and said, Alex, I need to buy 10 rentals this year. So, okay, well, it's January. We do have time, but not a lot of time. You'll blink your eyes. It's going to be Christmas. Okay. So V needs to do 10. Okay. Well, what's V's credit score? Well, V has a 17 credit score. Okay, cool. So she's so far in compliance with refinance. Okay. Question number 1 answered. All right. Well, how much liquidity does V have? V has $73,000 today. Okay. So V has $73,000 today. All right. So second thing that, hey, V, if you're going to be doing 10 of these, just for your own business purposes, have you interviewed property managers or anything like that? How are you managing this business? Because the worst thing an investor can do is become everything about their business, because you're going to spend more of one thing, time or money. And as you're making more money, you're going to have less time. So that means you have to hire third-party people, like employees, like property managers and things like that. So are you in compliance for what your business goals are by quarter 2, 3, or 4? So I don't need to help you with that, but you need to be aware of it. So again, be aware of your process. All right. So if you have $73,000, all right. So what you have to try to see is like, how much dollars out of pocket can you come out of pocket with, and how many deals at once can you do? Because at jet lending, you could be as in many properties as you want, as long as you can pay your note and get the work done and things like that. So as we do deals together and we watch your liquidity, we say, okay, well, listen, you're probably going to be able to have to buy these for 10 properties for $73,000. You're probably going to have to be close to $0 out of pocket at closing for your first closings, for your renovation closings, if you're going to want to scale to 10. Okay, so you got to buy these. All right, so I would put you in line with that. The second thing I'll tell you is, listen, I'm a big proponent, if you ever want to stop doing this is holding a portfolio of rentals. But one thing a portfolio of rentals doesn't do is increase your liquidity rapidly. That liquidity will...
It does the opposite.
Yes, it does. You are buying this off of appreciation values. Most landlord investors will hold a portfolio about 6 or 7 years and either refinance the portfolio or dump the portfolio and buy something bigger.
This episode is brought to you by Jet Lending. For over 20 years, Jet Lending has been helping real estate investors succeed. They offer 100% financing so you can be in at $0 at closing. I can always count on Jet Lending to fund my deals. If you're looking to fund your next deal, contact our friend over at jetlending.com.